So this is, like I mentioned, to those who logged on right at 6:30. This is a very entry level type of webinar. So we have actually two parts to this webinar: how to purchase your first investment property. So the part two is going to be 2 weeks from now on the Thursday. So basically, part one talks about some of the theory, about some of the benefits of investing in real estate, and then in part two, we're going to be talking about some of the experience that Carmelo and I have had. And also, as a bonus, on the same day, I'm also going to be hosting a webinar where I'm going to be talking about how I just transformed a long-term rental property into an Airbnb in Windsor. It was a 12 course. It was like a 12 days of craziness. But now it's up and going. So I'm just going to be sharing some of my experiences, some of my challenges, and some of the benefits and why I decided to do that.
I look forward to that webinar, Alex. I saw some of your videos and it looked pretty crazy.
Yeah, it was like a war zone. Like there's just Amazon boxes everywhere, Wayfair everywhere. I'm painting. Oh my God. Anyways, so let's get the show on the road here. So the legal stuff. So nor Carmelo or myself, we are not tax. We're not investment specialists. Each individual has their own goals and objectives with investing. We just believe in investing in real estate, but also do keep in mind, Carmelo's a mortgage broker. I'm a real estate agent. This is also our job and our profession. So do your own due diligence on the information that we're sharing with you. Do your own research. And if you have any questions, of course, in addition to our social media, Carmelo's also sharing our Calendly link. So you can always connect and chat with us on Calendly if there's something you want to ask offline. Carmelo, why don't you introduce yourself a little bit?
Hi, everyone. My name is Carmelo Boutis. I'm a mortgage agent at yourmortgageyourway.ca, located downtown Toronto. I've been doing mortgages for way too long. I've been doing it for over 20 years. I started my career a long time ago as a mortgage underwriter. For those who don't know that position or that title, a mortgage underwriter, that's the person at the bank that actually reviews your applications and makes a decision whether you're going to be approved for the financing or not. So the first thing I learned in my career is how the banks think when it comes to lending money for a mortgage. I worked for a lot of the big banks, worked for smaller more alternative lenders, and now I'm independent. I have no loyalty to any bank. It really comes down to which bank has the best mortgage and best product to suit your needs. So really, I work independently. I work for you, and I help find the best solutions to help you get into the home ownership or buying and owning multiple rental properties.
Very nice. And Carmelo on Instagram at Carmelo Mortgage. He has access to over 59 different lenders, and the benefit and beauty of that, and what I've seen firsthand, is that different people have different situations. You may be self-employed, maybe you have a full-time job, and then you have some secondary income that you have coming in from doing Uber Eats or Amazon Flex or whatever. And there's different options for every scenario. So definitely wealth of knowledge there.
Thanks, cool. Alex. Thanks for a little extra promo pump and push.
No worries. Okay, here's me. Okay, I'm Alex Winiecki. I'm a realtor of Remax Condos Plus in downtown Toronto. Before getting into the real estate game, I spent over a decade in Toronto's condominium industry. I was the vice president of a service provider that tailored only to Toronto condos. Because of that, I have a very in-depth knowledge of how condominiums operate. I've probably been in every single condo in Toronto at some point, whether that was to provide a walk around, a quote, we serviced it, meet with a property manager, meet with board members, conduct a risk assessment. I've participated in over 65 residential risk assessments as well. I've been a real estate investor since 2013. That's when I first kind of fell in love with real estate. And before that, it was from reading the book Rich Dad, Poor Dad. And in 2022 and most likely 2023 as well, I'll be in the top 1% of condo sales on Treb from over 70,000 realtors. My Instagram is alexz.realtor, and you can scan that QR code there if you want to get all my socials. And just like a reminder for those who just connected, we do have this Amazon gift card that we're going to be drawing on Instagram on November 30th. And to enter that draw, it's real simple. One entry is following either myself or Carmelo and sending us a DM, just letting us know which webinar you participated in. And it's maximum 2 entries because there's only 2 of us. So yeah, that's kind of how it works. Okay, so how does real estate investment work? Let's get into this. So when you're investing in real estate, you're basically purchasing real property, but the intention of that is you want to turn a profit. And there's certain different ways that you can make profit in real estate investing. One is cash flow. So cash flow is basically the difference between the carrying cost of the property and the rents that you have coming in. So what's left over after the rent is your cash flow. Another one is by having your tenants pay down your mortgage. So every single month when you are making a mortgage payment, part of that goes towards your principal, part of that goes towards interest. And when you have somebody else living in that property and paying you rent, that's what's covering those expenses. And the last is basically profiting from appreciation. So in the GTA, we've experienced over the last 23 years an average of a 5 to 10% annual appreciation for properties. And that's, that's basically where most of the profits have come in, because when you're buying real estate, that's a leveraged asset. When you're buying a $500,000 condo, let's say, you're not having to put $500,000 towards that property. You only need to do, if it's an investment property, 20%, but you're actually gaining and capitalizing on the full price of that property.
Yeah, real estate, it's a long-term investment. It's not a get-rich-quick scheme. It happens over time, and it's all compounding.
Yeah, it's time in the market, not timing the market, right, Carmelo?
Exactly.
So yeah, I get a lot of questions about this, where people are like, do you think that we're at the bottom of the market? Do you think that there's, more bottom to go? How do you think it's doing? I mean, ultimately, it's like when you're comfortable with the type of property that you can get and the carrying costs, and the property makes sense for you and your long-term investment goals, that's the right time to get into the market. It's not about trying to time it, because you don't know when the market has reached bottom until several months later when the trend has already reversed. So it's impossible to time it, but I know one thing, like in today's market, we're definitely not at the top. But
oh, sorry, Alex, I'm kind of curious. Like, do you have any stats to share, or?
Yeah, I do have stats. That's what I was getting to this. So I know we do see a lot of really, kind of like fear mongering. We get a lot of, things in the news where they're talking about the real estate market is crashing. Toronto is in a huge bubble. Toronto's been in a bubble for the last 30 years. I mean, look, here's the real stat. So one of the areas that really has some flaws when you look at the news, or where people give like blanket statements like Ontario Real Estate or TREB Real Estate, is that the Toronto Regional Real Estate Board has listings that are all over Ontario. It's not, those listings are not just in Toronto. You have people or agents that are TREB agents, and they list their property on TREB in places like Penetanguishene. I have a listing up there and it's on TREB. Windsor, Sarnia. So it's not really an accurate representation. Here's an accurate representation in front of you. This is the actual Toronto proper GTA market. And you can see that property types, detached, semi-freehold, prices have actually increased. The only area where prices have come down is condos. And there's also a lot less transactions across the board, meaning that properties are being listed, but they're staying on the market longer. And what this creates is, it creates a good environment, especially for anybody who's thinking about buying a condo as their investment, because the condo market has taken a hit from multiple factors right now. So first of all, you have investors who are selling their tenanted property because their mortgage is now up for renewal, and that cash flow doesn't make sense for them anymore. They're not making enough money to cover those carrying costs, so they're putting their property to market. You have people who bought pre-construction 3-4 years ago, and now they need to close on that property, and they can't qualify for the type of property or for that property anymore, period. So now they're assigning the contract to somebody else. And then a lot of times I see sellers who are assigning their condo properties at prices that are either at par with what they paid, or sometimes even below par. I mean, like, it's called a distress sale, and these are not advertised on the MLS. So you need to have a realtor that works in assignments and knows where to locate these assignment opportunities. And then third is, because condos are the entry point into real estate, naturally they have a lot more turnover because a lot of homeowners buy a condo, they get that appreciation, and then their long-term goal is to get into a freehold property. They want to get a townhouse, a semi, or a detached house, and they sell that condo in order to be able to afford that.
Sounds like an opportunity, Alex.
There's a good opportunity for, especially for condos right now in the GTA. I mean, freehold is holding strong, and just because Toronto is Toronto, like we're the top market in Canada, everybody's coming here. People are immigrating here like crazy. But yeah, condos, like it's about where the opportunities are. So there are good opportunities in condos, and for anybody who's looking to, hold it as an investment, there is, it's a lot more hands off for you as an investor than the house.
It sounds like going into a condo market is really a strong buyer's market. There's not as many people looking as you mentioned,
Yeah.
and there's less people looking. Units are available. You actually have time and an opportunity to kind of negotiate.
Yeah, I mean, look, it's about supply and demand. It's basically that's what it is. But it also, like, what is the seller's motivation to sell? You know, like, do they have multiple properties and they have to liquidate this one because they just can't afford it? Like, there's ways to get really good opportunities in condos right now. However, as an investor, you'd have to be okay with, the maintenance fees and that whole aspect of it as well, and being a little bit more controlled. But that's where the opportunities are. I mean, I know the Toronto Star basically said that we've entered a buyer's market for like the first time since 1989 or something like that. I don't believe that that's accurate for the freehold properties, but for condos, I mean, I see it firsthand. Like, there was last week that I saw on Treb, there was over 2,000 new listings for condos and only about 200 sales, and a couple of hundred, maybe a couple of hundred sold conditional, but that's where we're at. But overall, like, it's not doom and gloom. You can see on this chart, there's basically, like Carmelo and I spoke about it, it's about time in the market, not timing the market. Overall, our real estate market is incredibly strong and continues to go up. This is basically the last 30 years and price history. I mean, you can see, like any asset, like if you compare real estate prices to stocks, overall the price, has gone up, but there's always some pullback. And the stronger that the price action goes in one direction, that stronger that bounce back is going to be as well.
And the one thing is, when you're looking at investing, buying at a good property at a good price, and now you could actually buy something at a low price, is really how you make the money, right?
Yeah.
Buying at peaks when everyone's going crazy and there's like 20 people bidding on one condo or one house, it's kind of hard. But when you have the opportunity to negotiate as a buyer to buy something, if that seller doesn't like your price, you could always move on to the next property and find one that really wants to sell, and you could get a good property at a good price.
Yeah, I mean, I think it's like a Warren Buffett quote or something, that like when at the sound, like sell or run or something at the sound of laughter and buy at the sound of cannons or something like this.
But you buy when everyone's fearful.
Yeah.
You sell when everyone
greedy
is greedy.
Yeah, so it's kind of like you have to be able to shut out a lot of the things that we see in the media and kind of think about it rationally and mindfully, right? Like it's challenging because the media is just, they're there to sell advertising space, right? So
the media is everywhere, right? And it sends a lot of noise.
Yeah.
Right. So the key thing is, if you're looking at buying, there's really got to follow a few steps, right? And it's not hard. Buying a rental property is like buying your principal residence. The first thing is you got to do is you got to kind of evaluate your financial situation. When you're buying an investment property, you have to put 20% down payment. So you need 20% down payment plus closing costs. As this is not your first property, that land transfer tax credit, you don't get that anymore. You'll be dealing with land transfer taxes. So how do you get that down payment? Well, a lot of people get it from selling investments, stocks or bonds or mutual funds. But the majority of people, actually refinance their existing property. They could either add a home equity line of credit or add to your mortgage. And the one thing I do with all my investors is I help them evaluate how much equity you could take out, at the same time making sure how much do you qualify for with your next purchase,
Yeah.
right? 'Cause you kind of need to know what your budget is for what you're looking at buying. And the number one thing a lot of people I talk to or they're not aware of is your down payment can come from your refinancing. It doesn't have to come from savings.
Yeah. We're going to be talking more about that in part two, because we have some examples of how we've been basically able to use appreciation in our properties to purchase more properties. But you hit the nail on the head. And Carmelo, there's so many buyers or people that want to get into the market that when they'll come to an open house, but they don't even know what they can afford. The first step, and I don't know, I guess people don't really like to talk about finances too much, but the first step is actually, before looking at anything, is speaking to a mortgage broker and getting an understanding of what your affordability is, like what you're looking at. And then, once you have that, then you can decide on things like the property type or the market. And so that's the first step. But there's options for most budgets. And one thing that we do see that is a lot of times very limiting belief, I guess, I don't know, in new investors or maybe investors in Ontario, like in the US, I don't see this too much, but is investing kind of like outside of your hometown or outside of your province. Like, you don't need to be able to drive to your property. Like, I work with a lot of pre-construction investors in Alberta who buy properties in Calgary, and I work with Truman Homes, and we sell pre-construction, and it's very, very investor friendly and incredibly affordable compared to what you see in the Greater Toronto area. But you have to overcome that block of like not being able to drive there. But having that arm's length with property management in place, or even self-managing, it actually makes it a lot easier, I think, that you can drive there.
Alex, you do yourself. Where's this Airbnb you have again?
Oh yeah, that's in Windsor.
It's not exactly around the corner, right? So
no, I'm not, and I'm not going to be driving 3.5 hours to clean it either.
But you have to think outside the box when it comes to investment properties. It's not just Toronto. Although it is a great market, we got to look at everything, and you really got to understand your budget, because that's the number one thing. Qualifying for this mortgage, and I'm dealing with two different properties, especially with an unknown property, what you're buying. It can't be done over the phone. But I get that a lot. You got to go through the motions, and so I can understand and explain to you how all this works. So when it comes to taking equity out of your property, it doesn't matter which bank you work with. The maximum any bank could refinance a property is up to 80% of the value. So how is that calculated? Well, the first thing is what they do is they look at what's the value of your home. So for this example, we're going to say the value of the property is $500,000. So the maximum amount, this new mortgage or adding a home equity line of credit, so the mortgage and line of credit combined cannot exceed more than $400,000. Let's just say you bought the property 5, 6, 7 years ago, and you got a small mortgage on it right now. You got $220,000. That means you could take out $180,000 in equity to purchase another property.
Very interesting how that, like we mentioned at the beginning, I mean, it opens up your opportunities.
Yeah. And once you do this once, and then imagine what happens when you have two properties that appreciate and mortgage balance will go down and you build equity. It's getting into that first property. Once you get into that first one, it's a little easier.
Yeah, or at least even knowing like the options that you had, because I remember when I was looking to do this, and I saw people, and I heard these stories, and I was like, okay, so I can refinance and take out equity out of my property and use that as a down payment to purchase something else. And that, like, the mortgage broker that I was working with at that time basically told me, no, that's not possible. Like, the lender is not going to allow you to use that as a down payment. And so I basically fired that mortgage broker and found a new broker that they gave me the answers that I wanted, because I'm like, okay, I'm not like the first person to do this. I see this. Yeah. I have, I know people that have done this. Why is it that this person? So it's also like, about the kind of the professionals that you're working with, and your power team. Are you working with people who have done this themselves are, have the type of solutions that you're looking for. Because if you were to go into, one of the top 5 banks or 6 banks or whatever and speak to their mortgage brokers, they don't have that type of product because they don't have they don't lend based on that. They're not very, like, there's lenders that are very, from my experience, Carmelo, correct me if I'm wrong, there's lenders that are very investor friendly, and there's ones that are not investor friendly at all.
So it's not, I don't want to call it investor friendly. It's how they value and calculate rental properties. You can walk into the big 5 and you're going to get 5 different answers. It's really because of how they value it. And I know the difference between all of them, which is a key advantage. So after you know your budget, next step, Alex, we pass the baton to you.
Sure. So it's about location and deciding on what is it that, what location is key, but also location may not work with your investment style. So Toronto is a great location, AAA. It's great to be an investor in. Your property appreciates like crazy, but your property is not going to cash flow. You're going to have to put, an additional $6,000, $7,000 a month to top off that property every month after the base rent. I mean, as the market rent goes up and continues to go up, that gap is going to close. But when people invest in the Greater Toronto area, they're investing for appreciation. They're not investing for cash flow. At least, while we're talking about like single family dwellings, if we go into like triplex or fourplex or fiveplex, or you want to, you're buying I don't know, like a bungalow somewhere in Oshawa and splitting the basement into 2 units, like that's already a different story. But for single family, for like the entry level investor, make sure that you have budgeted for that. Carmelo?
Yeah, and keep it simple, right? Again, you're right, Alex. Again, if you're buying a property and expect the fact at the beginning it may be cash flow negative if you're looking at buying that single family dwelling, or that single. Let's call it single unit. It could be a condo, it could be a townhouse. This is where you have to kind of be creative with regards to how do you get more out of it. One thing is rents are going up like astronomically. They're not going up your 2, 3, 4%. Alex, how much are they going up? Basically per year. What is it safe to say, like 10, 15%?
15-20%, especially the last 2-3 years, because we had a dip in rent prices when COVID started. There was like an exodus; people were leaving the city, so landlords cut their rents very substantially. But now if you want to rent a 1-bedroom condo with parking in downtown Toronto, you're easily looking at $2,600.
And now there are different also rental styles. Like you're buying a unit where you can add another unit at a very low cost. And also, are you looking at the long-term rentals or maybe investing in short-term rentals?
Yeah, there are buildings in Toronto that permit short-term rentals. Now, there are short-term rental bylaws that exist. So you need to, make sure that you're aware of how, like in the GTA, you need to get a short-term rental license. But there's condos, for example, where you can rent your property on Airbnb.
So it's really, again, finding the right solution to match what you're looking for.
And also, how hands-on do you want to be?
Yeah. Hiring property management is an easy way to make this as a true investment where you're only going to be involved for high-level decisions, daily things that come up. Property management handles them, and you don't have to worry about anybody calling you if the light's off or the plumbing's not working.
Yeah. And, just like to talk a little bit more about Alberta and some of the opportunities that are available in Calgary, like, we have pre-construction condos, which are very investor friendly, as in like they have to include things like rental guarantees and free property management and very attractive deposit structures as well. So there's, there's different options. That's what I mean. It's like not just like looking in your own backyard, but like we discussed, it's about like, are you investing for cash flow or are you investing for appreciation? There's different ways to look at this. So it really, I guess, comes down to your own personal goals, because sometimes somebody, the first property they buy may be an investment property and they may continue to rent. And then the goal is they want to be able to move into that investment property in the future, right? So it's like, I think a lot of it depends on, like if you're single or you have a family and all of these factors go into play. There's no one shoe fits all type of outlook at this. It's just like everybody is completely different with their goals when it comes to this. So it's about being honest with your own goals.
Yeah. So you found the property. What's next? right? So the next step is once you find the property, you may be pre-qualified or pre-approved, as the people say. You actually got to secure the financing because the bank needs to know what property you're buying and what's going to be the investment, right? They have to be comfortable. You're buying a house, townhouse, condo. And the good news is, whether the property is currently being rented out or vacant, the banks can use the rental income they're going to be receiving on this property. What they normally do is they have an appraiser who's independent determine what the fair market rent is. So it's not like you buy a property that has no tenants and there's no rental income you can use to qualify. There are solutions for that to make sure you have that the income, then you can show that this, how this property is going to cash flow.
Yeah. I mean, there's more that goes into purchasing a property, like negotiating for the property, putting the right types of conditions in, analyzing that property and the current marketplace as well to see what kind of rents you can expect and kind of budgeting for it and finding out that, what are you going to be? Are you going to be anything out of pocket at the end of the month, or are you going to be cash flow positive, or, what is that going to look like kind of projecting it, doing a cash flow analysis. But that's like where, you should be also relying on working with an agent that is, well versed in doing this type of real estate and can kind of help guide you and navigate you. But also you should, build your own knowledge base. So, get interested in this. There's lots of different people on social media and YouTube that different authors that you can read their books, and there's different styles for doing this, right? So it's all different, but let's kind of get past this. In part 2, we'll go a little bit deeper into this, but basically, the final part is like, okay, so you've closed on the property, and now it's time to find tenants for that property. So you have different ways of going about this. I do have also another webinar about kind of becoming a landlord, but it's you can work with a realtor, which is going to be a lot more hands off for you to find tenants. And generally speaking, the type of tenants you're going to have applying, you'll have a lot more higher caliber tenants applying to you. But also, one thing that's important is to remember that these people are ultimately your clients. So, they're paying you. So you have to treat them with respect, but it's also about building a good relationship and also, kind of respecting their boundaries, because it's not about, it's you don't want to be getting into boot fights with these people.
Exactly.
Make sure, go ahead, Carmelo.
No, that's exactly it, right? And then afterwards, you kind of got to look at this is a business, right? It's an investment. You got to treat it as an investment. So you want to organize things right at the beginning. You want to it's smart to have a separate bank account for that property. Start saving your receipts, and get an accountant that's really knowledgeable, that understands the income and the expenses when filing your income taxes. It's very important to work with the right team and people to make this investment grow.
Yeah. And, if this is a property that's going to be outside of the GTA and you're going to be self-managing it, then you need to also have, contractors in place or people that you can call on to, when something comes up. If you're going to have a property management company, then it's a lot less hands off for you. They generally have that network of trades, but also it's you're going to be paying a fee to them, which is going to be probably between 5 and 10% of your monthly rent, as opposed to keeping that and kind of dispatching these people out yourself.
Alex, again, if I'm buying in Alberta, it's the cost of doing business, and I don't want to deal with everything every day.
Yeah, 100%. But I mean, it's still like, we all have access to Google. Like we can find a plumber and send them over there.
Exactly. It's not everything. I have a good network of tradespeople, and Alex, I think you may know a few of yourself, right? So reach out to your local network, because you'll be surprised who will know someone that was the shovel snow, or a good electrician, or a plumber, so on and so forth.
Yeah. So the long-term benefits, just to kind of recap some of the points that we touched on in the beginning, is that after you repay your mortgage, like if you go 25, 30 years into the future, you're basically gonna have a property that's gonna be free and clear and gonna be just generating that income to you. So that can be between $25,000 to $30,000 of income that you can be generating from this. And also, as you hold the property longer and longer towards that free and clear status, you're going to be getting more and more cash flow.
I think, Alex, again, if you're getting like 2,500 a month now in rent.
Mhm.
The way rents are going up in 25 years, I won't be surprised if that you're getting 5,000 a month in rent. Sounds crazy, but
Yeah,
that wouldn't surprise me. Now
I
you
guess
have
what would be the
something.
purchasing power of that 5,000 though?
Now you have something, 25 years from now, giving you 5,000 a month. That's more than my Canadian pension plan that they're going to be getting.
Yeah, it's basically a forced savings account.
Exactly.
That's what it is. That appreciates, but it appreciates not on your down payment. It appreciates on the whole value of the property. So as you hold your property longer and rents go up and you're paying down your mortgage, your cash flow is going to increase as well. So it'll be the toughest part is kind of getting in like the first maybe year, but after when you get used to it, then it becomes a lot less tough.
Exactly. And again, once you own the property, again, it's also part of your net worth, and real estate creates generational wealth. Because again, over time, you're holding real estate for a long time. If you're going in for 1 year, 2 years, buying something, renting it for years, and trying to get out, it's kind of hard to make money. So that's more speculating. If you're holding it for 5, even 5, I consider short term in real estate. If you're buying for 10, 15, 20 plus years, it's kind of like a no-brainer. Just give it the time. It's like planting a seed in the ground, watering it, and watch the tree grow.
Yep. And also do keep in mind all your expenses are tax deductible as well. So
everyone, I hear all the time, how much is it going to cost? Like any cost with an investment property, and this is where you got to have a good accountant. So you talk to your accountant again. They have to go through legal fees and repairs and any interest you pay, even in this interest rate environment. It actually becomes a benefit. Because now it helps you reduce your income taxes, right? So it becomes the tax benefit.
Yeah, you can get a significant return if you're a T4 employee, and depending on what tax bracket you're at, it might be just very beneficial to do something like that. I mean, even like 2 weeks ago when we had Michelle and we were talking about buying a property for somebody's kids if they're going to university, and how that can be, you get a tax break, you get the property, you get the appreciation, you're not paying for student housing, and then
Yes, that's actually if I help someone like that too. It's like where somebody you could buy if you have children and they're going to university and say in the Greater Toronto area, you could actually buy a secondary home for them to live in with just a little as 5% down payment. After the child, instead of having them pay rent or room and board at the college or university, they stay in this property. You can have a second home. After the college university is completed, it's not like you have to sell it. If you want to then rent it out, you own the property as long as you serve the purpose of when you bought it to have it as a second home to live in, not to buy it and then rent it out. That's something that's a big no-no.
Yeah. So, like I mentioned, this is basically the first of a 2-part presentation. This is just talking about the theory and some of the, the second part is a lot more practical. So that's the end of this presentation. We're just going to open it up to any questions. If you want to maybe turn off the recording.